The crypto market is showing unmistakable signs that a major breakout could be on the horizon, driven by three converging catalysts in policy: on-chain activity and altcoin rotation, yet each of these bright signals carries its own caveats and potential risks. First, the prospect of U.S. regulatory clarity has never been sharper. The much-anticipated Genius Act, aimed at establishing clear rules for stablecoins, the digital dollars underpinning countless crypto transactions, appears poised for a swift congressional vote, with President Trump asserting that 11 of 12 key senators are ready to vote yes. In parallel, lawmakers are advancing the clarity and anti-CBDC bills, each designed to fortify the crypto sector against overreach by traditional financial institutions. Should these measures pass, they would not only legitimize stablecoins and tokenize payments under federal law, but also embolden institutional capital to enter the space without fear of retroactive policy shifts. This policy runway could trigger a surge in both retail and institutional inflows, as banks, pension funds, and corporate treasuries finally gain confidence that their digital asset allocations will not be criminalized or disabled by shifting regulatory sands. However, the flip side is that legislative hiccups, unexpected carve-outs, or onerous compliance requirements could swiftly dampen this optimism. Even if the Genius Act passes, ambiguous language or stringent audit mandates might raise costs for stablecoin issuers and deter market makers, creating fragmentation and liquidity traps rather than the hoped-for seamless on-chain payments. Ecosystem second, on-chain indicators from Ethereum reveal an underlying strength that bodes well for the broader market. Over the past week, SharpLink Gaming added 5,188 ETH, approximately $15.8 million to its reserves, bringing its total holdings to nearly 285,894 ETH, over $870 million. While another major institutional player withdrew 80,312 ETH, around $224 million from KuCoin, presumably for cold storage. Such large-scale accumulation by smart money suggests that these whales view current prices as a buying opportunity, well below Ethereum's all-time highs. Moreover, daily transaction counts on the Ethereum network have surged towards 1.5 million levels not seen since the 2021 peak, signaling a genuine revival in usage for DeFi NFTs and value transfers. Increased network activity typically translates into higher fee burn via IP 1559, reducing ETH's supply and reinforcing its deflationary profile. Taken together, these on-chain metrics depict a maturing ecosystem where supply is tightening, even as demand grows. Yet investors must recognize that high transaction counts can also reflect yield-hungry speculators chasing weekend DeFi spikes or NFT minting frenzies, which may not translate into sustainable long-term growth. A sudden vulnerability in a high-profile DeFi protocol, network congestion, or a break in the fee burn mechanism could reverse sentiment and trigger a sharp sell-off, particularly if short-term speculators rush for the exits. The third signal lies in the potential onset of an altcoin season, where mid and small-cap digital assets outperform Bitcoin as capital rotates in search of higher beta returns. CoinMarketCap's Altcoin Season Index currently sits at 37, well short of the 75 threshold that traditionally signals a full-blown alt rally, but trending steadily upward. This implies that while Bitcoin maintains dominance, investors are beginning to redeploy profits into altcoins such as Solana, Cardano, and others, widening the market's breadth. Historically, a weakening Bitcoin dominance accompanied by broad altcoin strength has presaged the most powerful bull run, spreading gains across thousands of tokens. If the trend accelerates, it could catalyze a self-reinforcing cycle of money moving from Bitcoin into alts, thereby amplifying crypto's overall market cap beyond what a Bitcoin-only narrative can achieve. That said, altcoin seasons carry inherent volatility and concentration risks. Smaller projects often lack liquidity and can be subject to abrupt rug pulls or algorithmic trading anomalies. Sudden macro shocks, such as a hawkish Fed announcement or geopolitical crisis, could provoke a flight back into Bitcoin or even fiat, leaving alt investors scrambling to salvage their positions amid cascading stop-loss triggers and erratic Market behavior. Behind these three positive signals lies the persistent behavior of holders. Despite Bitcoin's near-record highs, most investors remain steadfast in their conviction, opting to hold rather than lock in gains. Glassnode data confirms that realized profit withdrawals have been modest compared to prior peaks, and the realized profit-loss ratio for short-term holders remains low. This suggests that the market is not yet overheated. Distribution from weak hands is minimal, providing a cushion against sharp corrections. However, complacency can be deceiving. Should any major exchange experience technical issues during peak volume, or if a significant project faces regulatory scrutiny, the resulting panic could override even the most bullish on-chain signals. Putting all these threads together, crypto stands at a pivotal juncture: supportive regulatory momentum, robust on-chain accumulation and usage metrics, and the early stirrings of an altcoin renaissance. Each catalyst reinforces the others. Regulatory clarity fuels institutional confidence, which in turn boosts on-chain demand and fosters bidirectional flows between Bitcoin and alt markets. Yet every upside has its counterpart risks. Ambiguous legislation, speculative blow-ups, and macro volatility remain ever-present threats. Savvy investors will navigate this landscape by diversifying across blue-chip protocols and high-growth alts, employing risk management tools such as scaled position sizing, stop losses, and hedging via options. As the pieces fall into place, a major breakout may indeed be imminent, but whether it leads to sustained, orderly growth or a whipsaw-ridden frenzy will depend on how the market balances these converging forces. In the coming weeks, keep a close eye on passage of the Genius and Clarity bills, Ethereum network health, and shifts in Bitcoin dominance. They will collectively write the next chapter in crypto's unfolding story.